Sun International is a company I would think most South Africans are pretty familiar with. We've been going since 1983 and commenced operations in South Africa, in the former homeland states at that time, and expanded quite quickly into Africa, the neighboring countries. And more recently, we've led initiatives to expand into Latin America, which is a continent we see a lot of growth in. We've had a very busy year, and if I had to look back on it, starting with the operations, it's been a year of two halves. I think the first half of the year, we found ourselves in a bit of a perfect storm. Our big operation in Chile, which had been growing rapidly every year, was hit by an anti-smoking legislation impact, which was significant. There's a massive correlation between gambling and smoking, and we lost a significant proportion of our revenue, even more of our EBITDA. And without the growth coming from Chile, we were left looking at a South African market which has been very subdued. If you look at the economic growth in the country, it's below 2% right now. Our operations here are relatively mature, so we rely on economic growth, and that just wasn't coming through. So the first half was very disappointing. We've taken a lot of corrective action, starting in fact towards the end of last year, end of last calendar year, and I'm delighted to say that the impact of that's starting to come through now. We've seen growth in the South African operations, and that's growth that we've created ourselves by taking measures to increase revenue and to cut costs. And we've actually seen a recovery now in our Chilean operation, which as I say, I'm delighted to report on. Chile's back almost to normal, significant growth the last couple of months, and growth coming through in our core South African business. So the second half of the year, we can actually show EBITDA up 16%, which is a combination of revenue growth as well as cost-cutting measures. We finished the year off with that strong second half, 5.5% up at revenue and 4.5% up at EBITDA. We've had a few properties open in the year just gone, the Maslow and the Boardwalk in South Africa. So the impact of depreciation and extra property charges coming through from those properties means that adjusted HEPS level, earnings per share level, we're still slightly down, but I think we're really well positioned for the year ahead.